LG are patenting an NFT-compatible TV, Binance has officially left Canada, and will Bitcoin crash to $15,000? Welcome back again, I'm Theo, a content creator for the AltCryptoTalk team, and in this video we will be covering all of the latest crypto news in the last week. Nothing in this video is financial advice, purely my own opinion and based on my own research. Do not invest in anything you can't afford to lose. Also, I would like to say a massive thank you to everyone who has subscribed and showed support on our channel. You guys are incredible, and just like I promised, the giveaway for reaching 3,333 subscribers has finally concluded, and it is now time to reveal the winners. To those who win, please contact me over on Twitter at AltCryptoGuy to claim your rewards. For those who did or didn't win, stay up to date with new videos because this is the first of many YouTube giveaways. We will be revealing the winners in a second, but once again, a huge thank you to you all. Don't forget to hit that like and subscribe button and leave a comment if you have any questions whatsoever. And be sure to follow us on Twitter at AltCryptoGems for daily crypto content, and check out our website for frequent guides, project reviews, articles, and everything crypto related. Okay, let's jump straight into the giveaway first. Okay, so let's spin the wheel. Adrian Whitworth. Okay, remove. The website is a bit laggy, but Adrian Whitworth, congratulations. The next winner will be, let's find out. Spinning the wheel once it loads. Dzoni Crypto, well done, congratulations. Remove. And the third and final winner will be Anna Musty 1031. Congratulations, you are the third and final winner. So everyone, thank you again. I really appreciate all of your support. To all of the winners who did win in this video, please hit me up on Twitter at AltCryptoGuy to claim your rewards. And let's carry on with the news video. Okay, so let's start off with the first news. And LG Electronics seeks patent for TV which lets users trade NFTs. Now this is going to be a game changer, and smart TVs are about to change form forever. As some of you may know, LG has been a node operator for the Hedera network since 2020, and that is going to tie in with the article in a second. So apparently the TV would be able to establish a connection with an NFT market server, receive and display preview artwork, and fulfill purchases via the user's cryptocurrency wallet, which would be connected to the TV. LG began its work bringing NFTs to its TVs last September with the release of its Arts Lab marketplace, which was plugged into the Hedera network, on which LG has been a node operator since 2020. The move to file for a patent suggests that LG sees ongoing consumer demand for NFTs in the future and sees a business case for making them more accessible. The South Korean firm is not only the electronics giant to have spotted an opportunity in bringing NFTs to TVs. Samsung released an NFT marketplace on 3 of its TVs in January 2022, supported by a nifty gateway, which is also a huge NFT marketplace. Samsung seem to be very bullish on crypto. They even have their own mobile with a hardware wallet installed in it. And I believe Samsung is going to be well positioned in the future of crypto, and it is a good idea to see where they are investing their money, and most importantly, what networks they're supporting. And in this case, Hedera seems to be their chosen network. I am very bullish on Hedera, and we actually have a tutorial on how to set up a Hedera wallet. If you would like to watch that, I will leave the link in the description below. But let's move on to the next article. This one was just short and sweet. And the next article, crypto companies are playing poker with the SEC as agency cracks down on the industry. Well, they're not actually playing a game of Texas Hold'em or any kind of poker. Basically, a lot of these crypto companies are trying to bluff the SEC, and let's see what they mean. So, cryptocurrency companies are playing a game of poker with the Securities and Exchange Commission, aka the SEC, making bold threats to leave the US as the regulator steps up pressure on the industry to toe the line. Major players are hoping that the SEC and Washington takes what crypto watchers see as bluffs seriously and soften the hard line that regulators have taken on the industry. Executives at firms including crypto exchange Coinbase and blockchain services company Ripple have piled on with the comments laying into the SEC and signaling plans to shift businesses overseas in a bid to rally support and send a message to US politicians concerned that the country may miss out on a key technological innovation. Very, very true. The US seems to be the worst for cryptocurrency right now. Coinbase CEO Brian Armstrong said last week that the SEC was on a lone crusade, with its tough actions against certain crypto companies. He added that the chair Gary Gensler had taken an anti-crypto view, despite earlier being a supporter of the industry during his time as an economics professor at the MIT Sloan School of Management. The SEC is a bit of an outlier here, Armstrong told CNBC's Dan Murphy in an interview in Dubai. I don't think Gensler is necessarily trying to regulate the industry as much as maybe curtail it, but he's created some lawsuits and I think it's quite unhelpful for the industry in the US writ large. Brad Garlinghouse, CEO of Ripple, also tore into the SEC this week. When asked for his message to Gensler as the company announced an expansion into Dubai, he equipped "who," before later saying Ripple have spent $200 million defending itself against a lawsuit initiated by the regulator by the time it is over. $200 million is an insane amount of money just trying to defend itself against the SEC. With that time and money spent, we could be in such a great place. XRP could be dominating the market, the whole financial economy could be completely different, and we probably wouldn't be in a strut that we're in now. I find it, as a company that started in the United States and as somebody who is a US citizen, it is sad. I have sadness about this. The US is getting passed not just by a little bit, but by a lot, Garlinghouse said. The tough thing about this is you have a country that I think has put politics ahead of policy, and that's not a good decision if you're trying to invest in the economy. The big question is, will they stay or will they go? The US is one of the largest markets for crypto, and hence it is highly unlikely that they will leave. The biggest fear of crypto companies is that the regulation will cause panic amongst crypto investors and prices will go down. To look confident or even arrogant is a common tactic of a crypto company CEOs. They think this will translate into investors' confidence, overconfidence in some cases, and will encourage further irrational behavior amongst investors. And examples of this would be HODL, which is holding on for dear life, even when markets are failing. Ripple's CEO has been threatening to move his company's headquarters overseas since 2020. In October that year, he said the UK, Switzerland, Singapore, Japan, and the UAE were under consideration for Ripple's potential move abroad. That hasn't happened yet. Coinbase chief meanwhile suggested at a London fintech conference in April that the firm would consider options of investing more abroad, including relocating from the US to elsewhere if the exchange doesn't get regulatory clarity in the US. They said they will always have a US presence, but the US is a little bit behind right now. Over 50 million US citizens own crypto. Even Binance, the world's largest crypto centralized exchange, recently said it had become more difficult for the company to operate in the US and that it was minded to establish a regulated operation in the UK. So as you can see, all of these major companies are now trying to move out of the USA, but this could possibly be one huge game of poker that everyone's trying to play. The SEC is trying to bluff all these other companies, and these other crypto companies are trying to bluff the SEC. It is one big circle, and we need to get out of it. I think we can all agree on that, and we need to start changing this industry once and for all. Let's move on to the next article, which ties in with Binance, which, as you may have heard now, Binance is pulling out of Canada amid new crypto regulations. And this is terrible for the citizens of Canada. Last Friday, Binance said it had to withdraw from Canada, weeks after the country issued a series of new guidelines for crypto exchanges, including investor limits and mandatory registrations. Canada has tightened regulations for crypto asset trading platforms in recent months. With the introduction of a pre-registration process, companies that do not adhere to the rules will face potential enforcement action, according to the website on the Ontario Securities Commission. Unfortunately, new guidance related to stablecoins and investor limits provided to crypto exchanges makes the Canada market no longer tenable for Binance at this time. Binance said it does not agree with the latest guidelines and hopes to engage with the Canadian regulators to create a comprehensive framework for crypto operations in the country. We are confident that we will someday return to the market when Canadian users once again have the freedom to access a broader suite of digital assets. And this was said by CZ, the CEO of Binance. Following the onset of the crypto winter of 2022, which wiped out more than $1 trillion from the industry's market value, lawmakers and securities regulators demand tighter guidelines for disclosures on how crypto companies operate and hold customers' funds. In March, Binance and its CEO CZ were sued by the US Commodity Futures Trading Commissions for operating what the regulator alleged was an illegal exchange and a sham compliance program. There is so much FUD hovering around Binance and CZ. Honestly, I feel for the whole Binance team and CZ. Every single day is something new. People claiming that they have such evidence against them, but the funny thing is we don't really see this evidence, and the funny thing is that Binance is still operating and they are doing everything in its power to operate as much as possible in every single country they can. Obviously, with the regulations and what's going on, it's hard for them to do so, but they are definitely trying their best, and CZ is trying to make everything as transparent as possible. He brought in the whole wave of centralized exchange transparency, and we're not thanking him for that. We're all just focusing on the bad stuff, But guys, I'm going to leave this article like that. Let's move on to the next one, which kind of ties in together, as the European Union is now trying to regulate crypto once and for all, which basically I'm not going to go into too much detail, as we have been covering over the last few weeks and not much has really changed. But the European Union is finally planning to force crypto companies to give tax authority details of their clients' holdings. But the European Union is really going for the push for crypto, which is absolutely unbelievable, considering that America is going the opposite direction. The bill dated May 5th closely matches proposals made by the European Union Commission in December 22 as part of a bid to stop EU residents stashing crypto abroad to hide it from the tax man. So, this article says the European Union plans to force crypto companies to give tax authority details of their clients' holdings, according to a draft bill related to CoinDesk under Freedom of Information laws. The data sharing law, based on a model from the Organization for Economic Cooperation and Development, aka OECD, is set to be agreed by finance ministers next week and will have tax authorities to share data within the 27-nation bloc. The Commission officials have said the bill received under a unanimous acclaim at a meeting on Wednesday, though people familiar with the matter told CoinDesk that some finance ministers have not yet received formal approval from Parliament. The bill, dated May 5th, closely matches proposals made by the European Commission in December 2022 as part of a bid to stop EU residents stashing crypto abroad to hide it from the taxman. Essentially, they're bringing in all of this regulation just to stop anyone from hiding their crypto from the taxman. Obviously, this will tie in with CBDCs, central bank digital currencies, which we all know are coming, and I'm not actually that keen on, but it will be the future of finance. If there's going to be one way for the government to get their hands on our crypto, it is going to be CBDCs. Guys, keep an eye out for that stuff, be very cautious, and make sure to stick to the world of DeFi. Let's move on to the next article. And this is actually very huge. Microsoft, Goldman Sachs, and other huge firms are backing the launch of a new financial blockchain, and it goes by the name of the Canton Network. This is very new. No one seems to be talking about this at the moment. Companies like Deloitte, S&P Global, and Moody's have come together to support the launch of the Canton Network, a blockchain designed to streamline financial markets with Web3 technology. The network aims to provide companies with decentralized infrastructure that could make transactions more efficient, linking financial systems together and allowing them to operate in a synchronized way, participants said in a press release. Assets, data, and cash can synchronize freely across applications, they said. This creates opportunities for financial institutions to offer new innovative products to their clients while enhancing their efficiency and risk management. The institutional adoption of Web3 tech has still robust last year despite a slump in digital asset prices. The announcement signals that some firms still view blockchain tech positively regarding its potential, despite a regulatory cloud in the US and harm caused by several crypto-native collapses. The Canton Network leverages a smart contract language named DAML, created by software company Digital Asset. For the first time, financial institutions can realize the full benefits of a global blockchain network while operating within the regulatory guardrails that ensure a safe, round, and fair financial system, said the Digital Asset co-founder and CEO Yuval Ruz. This is a significant step forward for the blockchain space. The Canton Network has 30 participants so far, including Paxos, Goldman Sachs, BNP Paribas, Cboe Global Markets, and Microsoft, and the group said it expects the network's number of connections to grow exponentially this year as applications are developed. That is absolutely huge. They have got partnerships as big as almost Hedera. The Canton Network could be an enormous blockchain. The network is addressing some of the most common hurdles holding institutions back from using Web3 tech, such as a lack of privacy and control over data, trade-offs with chains that currently offer interoperability and scaling limitations, and starting in July, network participants will begin testing the network's interoperability across a range of use cases and applications. One of the largest investment companies, BlackRock CEO Larry Fink, said last year that the tokenization of assets, representing assets like stocks with digital tokens, could be an inflection point for traditional finance, holding the potential for instantaneous settlement and reduced fees. So BlackRock CEO even knows himself that these cryptocurrencies and blockchain technology will be the future. At Cboe, we believe the tokenization of real-world assets may offer an unprecedented opportunity, and adding it could create new market infrastructure and drive efficiency in the trading of products across the globe, said Clay, the Executive Vice President of Data and Access Solutions. Well, I'm definitely going to be keeping my eye on the Canton Network. There isn't much information on the Canton Network. I did a little bit of research and found out that it's going to be entering testnet soon. For those who are developers, you can now access the website and sign up if you want to get started on their network. But let's leave that article short and sweet. So the article we've all been waiting for, Could Bitcoin head towards $15,000? Supposedly, these crypto analysts say that there are 4 alarming charts that are signaling for Bitcoin to hit $15,000. The US dollar index is double bottom. So I must say before we go through this, I'm not a professional crypto trader. The AltCryptoTalk team has an unbelievable array of crypto traders. If you want to take advice from professionals, then head over to the AltCryptoTalk Discord and you will get some solid advice. Here, I'm just going to go through what analysts have said in this article. So we're going to briefly look at 4 charts. This is the first one, the DXY weekly price chart. And apparently Bitcoin is now hitting a double bottom, which is one of many signals that traders use to signal where a cryptocurrency is going. And not just crypto, it could be any asset. We've got a gold price near key reversal point. So apparently it's testing the level of resistance, similar to what it happened in August 2020, which then proceeded to an 18% price decline. So this is the second chart. The third chart, the M2 money supply declines. M2 measures cash in circulation plus dollars in bank and money market accounts. Supposedly it has declined to 20.81 trillion, down over 4% from peak in May 2023, which is this month. So a 2% plus drop in the M2 supply, something which has happened 4 times to date, is bad news for the stock market since it preceded 3 depressions and 1 panic. In other words, the significant move lower in M2 could foreshadow new lows for Bitcoin, which often moves in tandem with US stock indexes. So that is the third chart showing that Bitcoin is bearish, and the fourth chart is the rising wedge, and Bitcoin appears to be heading towards the $15,000 to $20,000 price range, depending on its potential breakdown point from what appears to be a rising wedge pattern. For technical analysts, a rising wedge is a bearish reversal pattern that appears when the price rises higher inside a range defined by 2 contracting ascending trend lines. It resolves after price breaks below the lower trend line, falling by as much as the maximum wedge height. If the Bitcoin price pattern is confirmed, particularly given the above mentioned macro indicators, Bitcoin price stands to decline to as low as $15,000 in 2023, which is down about 45% from the current price levels. So this would be absolutely atrocious for Bitcoin, and you can definitely bet that altcoins will definitely fall with it. And major influencer Il Capo of crypto has been saying this for months. A lot of crypto influencers have been slamming him for this, which was not fair at all. You should never slay anyone, you just never know in the world of crypto. It is always good to be cautious and take everyone's opinion with a pinch of salt. So do with this information what you must. I will be dollar cost averaging once the market is in a downtrend. I've been doing so for the last few weeks anyway, since altcoins have been dropping insanely because of this whole meme coin thing. I don't think we're going to enter a bull run anytime soon. I think it is more likely that we're going to crash and that the next bull run won't happen until the next Bitcoin halving. Looking at the total cryptocurrency market cap, it is currently sitting at about $1.14 trillion. It has been hovering around this price for a long time. I think if Bitcoin is going to crash, the whole market cap is definitely going to drop below $1 trillion, and we're going to experience a rough ride for a few months, but it will be a great time to accumulate. Guys, that's pretty much it for this video. If you enjoyed it, please don't forget to hit that like and subscribe button, and our channel is full of crypto gems that you can hunt for yourself, so be sure to explore our YouTube channel and follow us on Twitter. And guys, we also have a promotion running on Bybit, the best centralized exchange platform for buying, trading and earning. Bybit is home to all your favorite cryptocurrencies, and you can claim up to $4,380 just by signing up using the link in the description below. It's simple. If you need help finding the right crypto gems, then follow us on Twitter at AltCryptoGems and head over to our website to get your hands on detailed project reviews, crypto guides and more. Thank you very much for watching, and we hope you found this video helpful and informative. Until next time, D-Gens.